Can't believe that NVIDIA stock has rallied almost 220% this year to date in 2023. A lot of people are saying that it'll grow a lot more. Others are saying that it's a massive bubble. NVIDIA is the leading stock on the S&P 500 over the last year by far. It's up 2 times as much as the next best S&P stock, Royal Caribbean Group. But that's nothing new. It's up 550% over the last 5 years and was one of the first stocks, if not the first stock, that bounced back from the bear market in 2022. It recently killed its earnings for Q2 of 2023 and just announced a partnership with Google Cloud for AI. Its earnings are expected to more than triple this fiscal year due to booming chip sales for data centers and artificial intelligence. Chief Executive Jensen Huang had said that this is because a new computing era has begun, and that companies around the world are transitioning from general purpose to accelerated computing and generative AI. The company that pioneered graphics processing units for video games has now expanded into AI chips for supercomputers used in data centers and drug development. NVIDIA chips are also used for Bitcoin mining and self-driving electric cars. The company's in the middle of a massive shift in technology and is positioned to profit off of all of it. How is NVIDIA rallying so much? Are these gains sustainable? Is NVIDIA a good company to own for the long term? Is it too late to hop in? We're going to try to answer these questions by breaking down the following items: business, fundamental and technical analysis, buy and sell activity, and risks. Number 1, business. What is the NVIDIA business and what are the products? NVIDIA has 2 main segments, graphics and compute and networking. Graphics is 58% of the revenue and has to do with gaming, streaming, cloud-based virtual computing. Compute and networking has to do with data centers, systems for AI, autonomous driving, cryptocurrency. Both of these channels are fairly evenly distributed and are growing extremely fast year over year. NVIDIA's largest US customers are Amazon, Microsoft, Google, Meta, and Dell. They also power 70% of the supercomputers on the global top 500 list. This is one of their leading GPUs for gaming. It costs $1,600. They design the chips and rely on Taiwan semiconductor manufacturing to produce them. Taiwan produces 90% of high-end chips globally. 2, fundamental and technical analysis. How do the financials look recently compared to the competitors? In its latest quarter in July, revenue was up 101% year over year. They blew past the Wall Street estimates that at the time seemed extremely aggressive. Since that report, more than 24 analysts have hiked their price for NVIDIA stock. And it looks like they're going to keep selling every single GPU they can secure from Taiwan Semiconductors in the quarters ahead. As a result, the earnings for this year are expected to be 216% higher than last year, even though last year the earnings fell 25%. 3, buy and sell activity. What do people think about the stock and what are people who own the stock doing? Compared to some of its most relevant competitors, TSM, ASML, AMD, and Intel, it had the highest earnings per share growth forecast for 1 to 5 years, the highest gross profit margins over the last 12 months, not the highest cash flow margin, but that's probably because they're reinvesting all of their cash since they don't have a lot of debt. They had by far the highest price per earnings over the last 12 months, but that's normal because their price has gone up 4 times more than the next best competitor over the last 10 years. Even though that could indicate that the stock is expensive, most analysts actually don't think so. Out of the 51 analysts that cover NVIDIA stock, 47 of them rated a buy. Overall, they're profitable and in a good position to keep growing. It seems like they have good management and a sound balance sheet. For all of the analysts' ratings over the last 6 months on FinViz, it averages out to a raising price of 23%. Morningstar has a fair value at $480, right now it's at $455. CFRA and Argus have a target of $600 over the next 12 months. Overall, institutional ownership of NVIDIA was increasing from Q1 to Q2. 4, risks. Even though NVIDIA is the leading AI chip vendor today, tech titans like Google are focused on in-house development to cut their costs. So if the only competitive advantage that NVIDIA has is that it's the first one there, technology will catch up quickly and other companies will start eating up their market share. They also depend largely on a third-party vendor, and that relationship itself is also super vulnerable to political tensions. Some of their business units see boom-to-bust cycles like the GPUs for cryptocurrency. Overall, super fast-growing companies scare a lot of investors because if it goes up really fast, they think that it's going to fall down really fast too. The really high valuation and PE also reinforce this notion that it's in some kind of a bubble. That being said, it is a strong and healthy business and has been matching its insane growth expectations. It outperformed Wall Street multiple times for earnings and revenue over the last quarters. It's clearly the top leader in the semiconductor space and as a result has been the top stock in the S&P 500 and NASDAQ by price gains over the last year. What do you think about NVIDIA? Let me know in the comments.